Alright, now let us have a look at the Morning Star pattern. Till now, we have looked at three different patterns. One is the hammer, then the bullish engulfing pattern, and then the piercing pattern. So, this is the fourth of the most powerful bullish patterns, the Morning Star pattern. Again, the markets are either likely to go up or remain neutral after this bullish pattern. So, it breaks the previous downtrend. Okay, so let's define what is a Morning Star pattern, and then we will look at multiple examples as we have done for the other three bullish patterns. Okay, so this is the last of the bullish patterns that we will look at. One of the most significant or one of the most powerful bullish patterns, I would say, even more powerful than the bullish engulfing pattern itself. So let's have a look at the criteria for identifying a Morning Star pattern. So the first candle is a long black real body. So it must be a long black real body. The second candle is a small body, which is called as a spinning top. So this is called as a spinning top that ideally gaps away from the close of the first candle. So this small real body can be white or black, and it must gap away from the prior candle, which means that the bodies should not touch, but the shadows, if they are touching, that is fine. So that's the second candle, which is a small real body. It can be white or it can be black. And when we say it's a spinning top, doesn't mean that it comes at the top of a trend. That's a different kind of a top. It looks like a spinning top. So that's why we call it a stop, and that's the star in the pattern. The definition of a star is that it's a small real body that gaps away from a prior long real body in a downtrend or an uptrend. So stars we are not covering in this section in the level 1. So there is an entire section on stars that I am teaching. So for this video, we will only look at the star in the context of a Morning Star pattern. So the third candle is a long white real body that closes deeply into the first candle black body. Now when we say closes deeply, just to have a strict criteria, the white real body, as in the piercing pattern, closed above the midpoint of the prior black real body. So in this case, the white real body must close above the midpoint of the prior black real body. Another thing is, it should also gap away from the second candle, which means there is a gap. There should be a gap up opening. If the shadows are touching, that is fine, but the bodies should not touch. So the third candle must preferably gap away from the second candle. And this is the first three candle pattern that we have seen. Till now we have seen the hammer was a single candle pattern, the piercing pattern and the bullish engulfing pattern were two candle patterns. This is the three candle pattern. That is why it is more powerful, because one candle represents that the bears are in complete control over the market. The second candle represents indecision. So the market is taking a breath here. And suddenly the battle is won by the bulls because they pushed the price above the midpoint of the prior black real body. So that's the Morning Star. And obviously it must come after a downtrend, which is applicable for other three bullish patterns that we have seen. So let's quickly have a look at an example. This is a daily chart of Grasim. So it's an example of a Morning Star. Even if it's a small downtrend, that is fine. But look at these three candles. Now, we have two signals here. One is the the Morning Star itself. The low of the Morning Star, lowest low of these three candles would become support. So I would keep my stop loss here. That would be my entry. And that would be my target point, which I would aim at. So that's the target, that's the entry, and that's the stop loss. So a nice reward to risk trade. The reason why this is not a perfect morning star is because the real bodies are touching. If you see the first and the second candle, they are touching each other. If you see the white and the prior second candle, they are touching as well. In fact, the white candle is engulfing the prior black candle, but the close is above the midpoint of the prior first black candle. So the first signal is the morning star. The second signal is this hammer. It's a classic hammer because the lower shadow is more than twice the height of the real body on the daily chart. And the third signal, so the second is hammer, and the third signal is if we look at these two candles, that is a bullish engulfing pattern. So the white body completely wrapping around the prior small black real body. So you have the hammer, you have the bullish engulfing pattern, you have the morning star, all three combined into one. So that gives us the extra confirmation to take the trade confidently. You have three different candle patterns coinciding at one particular location in one single pattern, okay? Which is why you see this strong upthrust. Because it's a strong candlestick pattern. Even though it is not confirming prior support area, it is still a very strong pattern because the first candle represents bearishness, then some indecision, and then a big upthrust. Okay, so that's the morning star for you. Alright, now let us look at the different types of morning star patterns. So the basic criteria of a morning star pattern, let me repeat, is the first candle should be a long black real body. The second candle should be a spinning top, a small black or white real body. And the third candle should be a long white real body which closes above the midpoint of the first black real body. Now, the star should not touch either of the two long candles in the morning star pattern, and the pattern itself must come after a downtrend. The low of the pattern becomes our support area, becomes a very strong support area. So this is one traditional type of a morning star. What is the difference between this pattern and this pattern? In this case, the bodies are touching, okay? So even if the bodies are touching, I would say it's not a perfect morning star, but it is satisfying the criteria, other criteria of a morning star, which is the close of the white candle above the midpoint, and it is coming after a downtrend. So the difference between these two is that the body is touching. I would prefer this pattern over this pattern. Again, the difference between these two is just that the color is different. Color of the star is different. Even these candles are, even if you look at these two candles, okay, these two patterns, the body is coming within the long white or black real bodies. That is still fine because we want a small candle in between as our morning star. So only these two, I would say, are perfect morning stars because the small real body is not touching the black or white long real bodies. The remaining, I would say, are also morning stars, but not the perfect or ideal conditions that we would want, as in this case. So let's quickly look at an example. That's an imperfect morning star. This is an intraday chart. It's a 5-minute chart of India Bulls housing. You have a morning star. The black real body is touching the prior long black real body, and it is also within the body of the white candle, but other criteria is satisfied. It's coming after a downtrend. The close of the white candle is above the midway point of the prior first black candle. So the first signal is this morning star, which is not a perfect morning star, but we can consider it. The second signal is this bullish engulfing pattern because the white real body is wrapping around the prior black real body. So that's the second confirmation that prices are likely to go up, and all of this is coming after a downtrend. So since I have two confirmations here, now I don't need to wait for the prior support confirmation, I can look for the prices to go up from here. So that is how I would look at a morning star. Even though it's not a perfect morning star, the additional confirmation that we need is coming from that bullish engulfing pattern. Okay. So in this case, look how the price has climbed up aggressively. That's the power of the morning star pattern. Okay. Right. So let's give it a name. Okay. These are two morning star patterns. Which one would you prefer? I would prefer this one because the small real body, the spinning top or the star in the morning star pattern is not touching the prior long black real body, or it is not touching the next white real body. So there is a gap between the bodies. So the bodies are not touching. The shadows are touching, that is fine. But the body should not touch. So that's a perfect morning star for me. In this case, if you see the bodies are touching each other. Touching in a sense they are in the same line. There is no gap down or gap up. So in my view, this is a normal morning star and this is a classic morning star. That's a perfect morning star. That's an imperfect or a normal morning star. Okay. So let's quickly have a look at an example. So this is the stock of RBL Bank. It's a daily time frame. Okay. So the market is coming down, then it goes up for some time, then crashes again. Okay. Three consecutive black candles, large black candles. This is our star because it doesn't touch the prior black real body. So that's a star which indicates indecision. Now, although this candle is not a long white candle, which is one of our criteria for morning star, but look at where it has closed. It has closed above the midpoint of the first black real body. So how does it matter whether it opens here or whether it opens here or whether it opens here? As long as it is closing above the midpoint of the first black candle, it is having the same negative psychological effect on the bears. So in that case, we can consider this as a variation of a morning star, although the third candle is not a long white candle. So we can qualify this as an evening star based on the close. And of course, the bodies are not touching each other for all the three candles. So we can put our entry point here, or the stop loss will be here. So it's a large risk trade. If we look at this resistance line, so it's almost 1:1. So it's a very poor reward to risk trade. I wouldn't take this trade. If this resistance was not there, maybe I would consider this. But the purpose of this chart is to show you how a pattern which does not look like a morning star can act like a morning star, because you have to look at the closing. Plus other criteria are satisfied as well, which is the downtrend, that this small second candle, the star, the spinning top, and the gaps between the three candles. So I would look at it as a morning star, and rightly so. See, it has pushed the price up, and it has met this profit target. But based on the reward to risk ratio, I would not take this trade. Okay. So that's an example of an unusual looking pattern. But for those who are educated in candlesticks, for those who have correct knowledge of candlesticks, can look at a pattern like this and say, okay, yes, that doesn't look like a morning star, but it satisfies most of the criteria of a morning star. So why not take a long position on that? Okay, so the candlesticks really help us, make us think. The candlesticks tell us about the psychology of the market. So It's not that we need a perfect pattern always. Even this pattern, if I observe it carefully, it gives me the signal that I want. Okay? Alright, now let us have a look at the psychology behind the Morning Star pattern. What is happening here? Why is this pattern so important and why are we discussing this? First, it is coming after a downtrend, so the bears are in charge. We know that there is a lot of market activity on the opening and closing of a candle. So let's say a lot of bears jump into this downtrend. By the time this candle closes on that day, assuming it's a daily candle. So when the candle closes on that day, we have bears sitting on a profit. Now you have a gap down. So when the market opens here on the next day, the bears are even more happy because they are in more profit in an instant on the opening itself. Now, by the time that day closes, the market has closed up here. So now the bears are in doubt. They are thinking, if the market opened sharply lower from this point, why is it possible? How is it possible that the market has come back up? Because the bearish momentum was strong. This candle only goes to show that there is indecision in the market. So there is a battle going on between the bulls and the bears at this spinning top or at this star. And next candle gives us the final confirmation saying that yes, the bulls have finally won the battle between the bulls and the bears. So because the candle has closed above the midpoint of the first black candle. This is the reason why the Morning Star pattern is very important. And the reason why we keep the stop loss under the low of the Morning Star pattern is because that is where the bulls came in. That is where the bulls displayed a signal that they are not going to allow the price to go below this low. Remember that the lowest low of all the three candles becomes our support line. So that's the psychology behind the Morning Star pattern. The bears are happy here, but by the time the second candle closes, the bears are nervous, and by the time the third candle closes, the bears have already given up because the bulls have taken control of the market. Have a look at this example. This is BPCL daily time frame. Now, this is a nice U-shape pattern, which is a Morning Star. It's a perfect Morning Star because the bodies are not touching and the white real body has closed above the midpoint of the first black candle. It is coming after a long downtrend. Okay. So it's a very nice potential trade setup. Also look at the support area here. That support area has been respected by this Morning Star pattern. One negative would be this gap. You see here, this gap. Probably we can't see it with the naked eye, but with the software, if we expand this, we might see the low between the low of this candle and the high of this black candle. If there is a gap, if there is a vacuum, if there is no price action, then that gap becomes our resistance area. So in that case, the Japanese call it the falling window because there is no price action. Even if it is small, it is still a gap or a window. So that might become resistance. So in that case, I would not take that trade. However, if there is no gap, if this shadow is within the opening, then we can shoot for the next resistance. This is R1. R1 is minor because it's not a major high. These two are the main resistance points. Okay. So that would be our profit areas. We would keep our stop loss not below this, but below this because the distance between these two is very less. So that is the way we adapt to a market situation rather than keeping a hard and fast stop loss below the low of the Morning Star. Why not keep the stop loss below this established support area? So just to have that added protection. That would be our entry, that would be our stop loss, and this zone would be our profit target. one thing I want to mention here is there is a difference between this gap that I've spoken about and these gaps. This gap is a price vacuum. So let's call it a window rather than confusing it with a gap. Let's call it a window. A window because falling window becomes resistance. Here, the gap means the gap down opening or gap up opening here. So although the shadows are touching, but the bodies are not touching each other. That's the important point. Okay? So in this case, both the targets have been achieved. So that's the power of the Morning Star. In this case, it was a perfect Morning Star. Both candles are long. The spinning top is a small real body. Gapping away from the first long black real body is not even touching the third candle, which gives us that additional confirmation. Look at this up thrust. All of this happening on a daily time frame. So you have ample time to benefit and exit from the trades whenever you want to. Okay? As long as you keep your stop loss under these lows. As you can see, our stop loss was never hit. Okay? Alright, now let's have a look at the strength of the Morning Star. Okay, so we have looked at this slide before. These two patterns are perfect Morning Stars. The remaining are violating at least one criteria of the Morning Star. Of course, all are coming after a downturn, but the real bodies are touching in some cases here. But these two are perfect Morning Star. Even in these two, if I were to choose, I would go for this one because of the white real body. You have bears taking control over the market. However, suddenly you have a spinning top, and that too a white color spinning top. So when the bears were happy at the opening, they are not as happy as they were at the opening on the close. So if I had to choose between these two, this one is more stronger. Here, the bears are still happy because they are still in a profit position. The closing price is below the opening price, so their position is still profitable. Here, this candle has got the bears all confused, even before this candle has appeared. So that's a small little nuance we can use to identify the strength of the Morning Star pattern. Look at this. This is the strong pattern which we discussed in the previous slide. So the price is coming down. It's a swift downtrend. It's a daily chart of iShares Motors. So if I look at these three candles, a long black real body, suddenly a gap down opening, that too which is below the low of the prior black candle, and that too a white spinning top. So that gets the bears nervous, and then the final decision verdict comes when the white candle closes above the midpoint of the prior black real body. And it's a nice close, so that gives us the confirmation. And if you see, there is minor small gap here, so the second and the third candles are not touching, so it satisfies all the condition of a Morning Star, so we can expect the prices to go from here. If we keep our entry here, the stop loss here. See, the stop loss, I would not keep it exactly at the low. I would keep it just under the low. Just 1 or 2 points below the low. Because what if the price just touches the low and comes back? We don't want that to happen. So our stop loss should be just below the low. And that's our entry point. Maybe here we can target our trade. So not a great reward to risk. I would look for a 2:1 reward to risk. But just for illustration purposes, this is a very strong Morning Star pattern. In this case, the price has gone up. If we compare that, if that is our risk, then the price has gone up. How many times the risk? That is 1. That is 2. Maybe 2.5 times. The price has gone up 2.5 times our risk because of this morning star. It's a very powerful pattern. The stop loss was hit here, but there was no need to wait till here. You already had a lot of profits, and it's a daily chart, so it's been a long time, maybe 2 or 3 weeks, from second week of December till first week of January. So we never had to wait for this, and look how the support has held. The morning star low becomes support, and none of these 3 candles has been able to close below that support line. In fact, they have played the role of respecting that prior support created by the morning star. Okay? Alright, now let us have a look at what is called as the special morning star. You can guess from the way this pattern looks as to why we are calling it a special morning star. Because the star in that pattern is a doji candle. A doji candle is a candle which does not have a real body. We have a separate section on doji which is not in level 1 because doji itself is a huge topic to be discussed. But just for this video, just understand that doji is a candle which represents indecision. Doji represents the equilibrium in the market. Doji also represents confusion in the market. You never know where the price will go from here, because if the opening and closing are the same, it means that the power of bulls and the power of bears is same on that candle. So the bears who went short here look at this candle and suddenly say, what is going on here? Why are we not going down? Why are we stuck at that price? So this puts the bears under some confusion and doubt as to whether the bulls are not coming back to the market or so. So in the next candle, you have a long white real body which confirms the bias of the market, which is bullish. Okay? So that's a special morning star pattern because the candle itself, the star itself, is a very special candle. Now, this is a daily chart of Asian Paints. The market is coming down. So first condition is the downtrend. Second condition is the long black real body. Third condition is the doji. Now, this is not a perfect doji because it still has some small black color. But given that it's a daily chart, we can consider it as a doji candle. Okay, the price, opening and closing are almost the same. So it has gapped away from the prior black real body, which means it's a star. And you have, although they are touching, but there might be, if we expand the chart, there might be some gap there. Okay, so although the shadows are touching, but the bodies are not touching. And the close of the long white real body is above the midpoint of the first black real body. So it completes a perfect morning star. It completes a special morning star, and we can expect the prices to go up from here. This is a minor resistance. Main resistance is here. So that's our profit target. The entry position will be on the close of that day. And as we discussed before, the low of the entire pattern becomes support. So the lowest low of these 3 candles should be our stop loss, or just under the lowest low of the 3 candles. So nice 2:1 reward to risk trade, which has worked out. In this case, it has taken out this resistance on this candle. So it took quite a few days, maybe a couple of weeks or so, for our profit to get hit, but it was a nice trade with a special morning star pattern. Okay? Alright, now let us have a look at a non-morning star pattern. In a sense, those patterns which are not morning stars. We have looked at similar examples for the hammer, the bullish engulfing pattern, and the piercing pattern. So if we look at patterns which are not satisfying at least one criteria of the morning star, which disqualifies them as a morning star. So let's look at this. The first black real body, first candle is a long black real body, which is okay. The second candle is a star or a spinning top, that is also okay. But look at the third candle, it has gapped up from the second candle. However, the closing is below the midpoint of the first black candle. So this disqualifies this as a morning star. And this cannot be a morning star. Look at the upper shadow of the third candle. Although the shadows do not matter, but look at the long upper shadow. Upper shadow always indicates bearishness in the market. So there is less probability after this pattern that the market will go up. Okay. Let's have a look at this. The first candle itself is a small real body, which itself is a no-no. We need a tall black real body. So there is no point in looking further. The first candle itself is wrong. So this is again not a morning star pattern. So we need to understand these little nuances, the definitions we need to be very clear about. Unless we are clear about the definitions, how would we identify the morning star? Okay. Now, let's look at an example here. So this is a daily chart of Wipro. This is an example of not a morning star. So you have a nice downtrend here. First condition satisfied. Second condition, you have a long, tall black real body, done, satisfied. Second candle is a spinning top or a star that gaps away from the prior long black real body. Although the shadows are overlapping, but the bodies are not touching. Done, second condition satisfied. What about the third candle? Look where it has closed. First, it violates that rule where the body should not touch. It has opened below the opening and closing of the star, which itself is a no-no. So that condition is not satisfied. Second condition is the closing. It has not closed above the midpoint of the first candle black real body. So that is again a no-no. It's not a morning star because of these factors. So we cannot expect the prices to go up from here. We cannot take a long position here. But what we can do expect is the stalling of the price. So this candle and this candle represents some indecision in the market. Maybe the market is telling us that this prior downtrend may be ending, which is what is pointed out by these two candles. So because it is not a morning star, the price probably have not gone up. So it has stalled between these, because this still becomes a support because it's a star, gaps away and the bulls push it back up. So if we would have taken a long position here, our money would have been stuck in this box range. When the price gets stuck between these two lines like this, it is called as a box range by the Japanese. Okay. So we must also have the skill to identify patterns which look like morning stars but are not morning stars. Okay. Alright, now let us have a look at a quick quiz question. Okay, so I want to ask you whether this is a morning star or not. We are looking at this pattern here. Is this a morning star pattern or not? So let's analyze this. This is a daily time frame chart of Colgate. So the market is in a downtrend. First condition satisfied. Second condition, long black real body satisfied. Third condition, it's a small spinning top, small real body. It's a star. So second condition also satisfied because it represents indecision. And then the third condition, which is our tall white real body which closes above the midpoint of the black real body. So yes, this is a morning star, and one important thing to notice here is the prior support confirmation. The price bounced from here, so that's support. So this morning star is support, confirming this prior support. Okay. So we can look to enter a long position here and then keep our stop loss under the red line and then look for the market to go up. So yes, this is a morning star. Let me repeat, it comes after a downtrend. The first candle is a long black real body. The second candle is a star. The third candle is a tall white real body. And this morning star pattern is confirming a prior support area. So that's a morning star for me. See how the price has gone up. So because we have the confirmation of prior support, a nice uptrend started with this morning star. Now some might argue, how can we call this as a morning star? Because the trend is flat. For 3 days the price went flat, but if you look long term, the price has been coming down. So if we take that view, then this is definitely a morning star. Okay. Alright, now let us have a look at the power of the morning star pattern. The morning star pattern is a very powerful bullish sign, as is the bullish engulfing pattern. I would not say that the piercing pattern would be as powerful as the bullish engulfing pattern or the morning star pattern. The morning star pattern is very powerful because of the 3 candles that come into that. Now it's a very important chart I wanted to show you, because first thing, look at the time frame here. This is a monthly chart. Okay. This is GMR monthly. We are looking at the power of a morning star pattern. So the market is coming down. You have a tall black real body. Then you have a small indecision candle, which is the star or the spinning top. Now notice that it is not a perfect morning star because the small real body has not gapped away from the prior long black real body. For the star, we need the second candle not to touch the first and the third candle. So in this case, it is touching the first candle and slightly touching the third candle. Third candle was a long, very long white real body which closed well above the midpoint of the prior black real body. So those conditions are satisfied except for this small candle here, which should have been a little bit below. And another thing to notice here is, what is this pattern? This is a hammer, and that too on a monthly chart. So pay attention here. Although it does not satisfy the condition for a perfect evening star, but before even we have this candle, we got an initial signal from the market that the prices are likely to go up. The benefit of identifying the hammer as a candlestick expert is that you are not missing out on this rally. The problem with an evening star is that by the time the third candle closes, the market may be well off its low. So the market has traveled a great deal. So if you have the education about candlesticks, you can immediately identify a hammer, that too on a monthly chart, which is very powerful. Remember the rule, longer the time frame, the more is the probability of the trade working out. So the hammer already gave us that initial signal that prices are heading higher. So that was the first sign. Second sign was the imperfect morning star itself. All of this happening over a period of 3 months. Remember, each candle is representing a month. So this is, although this looks like a small pattern, but don't underestimate the time frame here. It is 3 months worth of price action, and 3 months is a very long time in the world of trading, okay? So if I were to take a trade here, first of all, I wouldn't take a trade here because there is a resistance here. So I wouldn't take that trade because of the poor reward to risk. But just to illustrate the power of the Morning Star, see, it easily broke that. There was some problem here. But once that resistance was respected for that couple of months, in another 2-3 months, the price again broke that and went up. Okay, so that was because the power of the Morning Star pattern. Even if it is an imperfect Morning Star, that is still fine. Because within the Morning Star, you have the hammer also. Right? So, that is how I look at the Morning Star. Doesn't matter what time frame it is. Only thing to understand is the bigger the time frame, the more is the probability that the trade will work out in our favor. Okay? Alright, just like the hammer, the piercing pattern and the bullish engulfing pattern becomes support. Even for the Morning Star, the lowest low of the 3 candles becomes support. So the lowest low of the Morning Star pattern becomes support. Similar concept we apply to the Morning Star here as we did for the hammer, the bullish engulfing pattern and the piercing pattern. So we take the 3 candles, we take the lowest low of the 3 candles and that becomes our support. So if I have to keep my stop loss, I will keep just under the support, maybe 1 or 2 ticks or 1 or 2 points. In this case, the second candle's low is the lowest low, so that becomes my support area. So let's quickly look at an example. So this is a daily chart of escorts. Morning Star pattern as a support. We are looking at Morning Star pattern and how it becomes support. So a steep downtrend on the daily time frame. So we have a Morning Star here. Not a perfect Morning Star because although the first 2 candles are okay, the other 2 candles, the second and the third candle are touching each other. So it's a Morning Star, but it's a imperfect Morning Star. So that is our first signal. Second signal is the bullish engulfing pattern. If we look at these 2 candles, they are completing a bullish engulfing pattern where the white real body completely wraps around the prior small black real body. So in this case, it's not a complete engulfing, but it has opened above the close of the prior black candle, which is even more bullish than a bullish engulfing pattern. So that's our second signal. So within one pattern, we see 2 patterns. One is the imperfect Morning Star and second is the bullish engulfing pattern. Now, if I look at this candle individually, we may call it as a hammer, but I wouldn't consider it as a hammer because the real body is not near the upper end of the trading range. If it was near the upper end of the trading range, then we wouldn't have had this upper shadow. So always remember that rule. Upper shadow represents bearishness and lower shadow represents bullishness. So even slight bearishness, I wouldn't accept that. So that is why I do not call this as a perfect hammer. If this body were a little bit up, where we have only a diminished upper shadow, that would make me comfortable calling it as a hammer, okay? Moreover, this pattern is not confirming any prior support, so that adds to one negative factor to this whole scenario. But yes, we have the Morning Star there. The close of the white candle is more above the midway of the first black real body. So in perfect Morning Star, the bullish engulfing pattern. So we take the lowest low of the 3 candles. We draw a purple dotted line. We keep our stop loss under the purple dotted line. We keep our entry point at the closing, because unless the candle closes, the pattern is not complete. And then we shoot for the profit targets, maybe here. I would consider this also as a resistance, but a very minor resistance. It looks like a box range here. So we can aim for the price to go up, which in this case has gone up nicely. So the Morning Star started here and the price started to go up. Although it was not a steep rise, which you would have expected like this. But in this scenario, this resistance has played a key role. It was because of this resistance that the price stalled there or could not go steeply upwards. But nonetheless, there is not a single candle in this whole area around 2.5 months where our stop loss was hit. So we know that we placed our position in the right place and we kept our stop loss in such a way that the chances of getting that stop loss getting hit was very low. This candle, which looks like a hammer, tried to do that but could not succeed, which was even more bullish sign. I would call it as a hammer, but because of the small trading range, I would become uncomfortable. Okay, trading range is the difference between high and the low of the candle. So I not just look at the candle patterns, I also look at the entire trading range. The same pattern can be seen but with small candles. That doesn't make any sense. We need a long black candle, long white candle, and as small as possible middle candle, the star or the spinning top. Okay. Alright, I wanted to show you this chart of a morning star. So this is Dabur. It's a daily time frame chart of Dabur. So there is a nice downtrend here and a morning star pattern. Is this a perfect morning star? No, because the first and the second bodies are touching each other. The second and the third bodies are not touching each other. But because of the first and the second bodies touching each other, this is not a perfect morning star. Ideally for a morning star, I would like all the three bodies not touching each other. The white candle is not a long white candle, but it has closed above the midpoint of the first black real body. So if I were to take a trade here, I would put my entry here, stop loss just under the low of the pattern, and aim for the price to go up. Understand that this is going to be a risky trade because it is not confirming any prior support. It is also an aggressive trade for aggressive traders because it's not confirming any prior support. One more thing to notice is that you have this candle which is a hammer because the lower shadow is at least equal to twice the height of the real body. Just by a margin, if this shadow would have been little bit small, it would not be a hammer. So it looks like a hammer. It's not a perfect hammer. Ideally, I would like the shadow to be longer than this. Like, for example, if the shadow is this much, then I would be more comfortable calling it a hammer. But if we do a precise measurement, it is a hammer because the lower shadow is at least twice the height of the real body. So not only do you have a morning star, you also have the hammer. And after hammer, if I would say so, the third candle is giving a price confirmation. So remember that concept when I said the hammer, which does not confirm prior support, is a risky trade. But if you wait for a price confirmation, if the second candle, the next candle after the hammer closes above the hammer, that's extra price confirmation for the hammer. But for morning star, we have not taken extra confirmation. For that, we'll have to wait for another day, another candle. Okay? So the market went up from there. This support has held, and we would have probably kept our target here because that was the previous high. So from here till here was our risk, and from here to here was our reward. So easily a 2-to-1 reward to risk ratio, which is what we want at a minimum. Okay? Alright, how do you put the entry and stop loss? Let me reiterate this. We have already looked at this with multiple examples. Let's go back to it. So you have a morning star after a downtrend. So the lowest low of the three candles becomes our support area. So I would keep my stop loss just under this dotted line. The dotted line represents the lowest low of the three candles. So my stop loss will be just under the low of this dotted line. my entry will be at the close of the white candle. Remember, you have to wait for a close unless the candle closes. It is not a morning star pattern because you never know what would happen in the last 5 minutes or 10 minutes just before the candle is closing. So you have to wait for a close. Once the candle closes, that marks our entry point. So this is our risk. And as discussed before, candlesticks do not provide price targets. So for that, we have to rely on Western support and resistance points or Western indicators to arrive at price targets. Candlesticks are a tool, not a trading system. Let's have a look at an example. So this is Bata India. It's a daily chart. We are looking at an example of a morning star. This is not a perfect morning star. This is called as a long-legged spinning top. I would call it a spinning top because of the small real body. And it is touching the first prior black real body. So which does not make it a perfect morning star. So if I were to take a trade here, where would I keep my stop loss? It should be under the low of the morning star. Another potential support is this, because this is not a big distance, so I can choose to keep my stop loss either here or under this just to have that extra cushion. Understand that this morning star is confirming prior support. So this candle has created that support, and this candle and this candle have not been able to break that support. They have not been able to close under that support. So this red line is also support, which is precisely confirmed by the morning star. Now the profit target would be the prior high, which is this. So if we look at the trade, if I look at this as my risk, then you have nice 2-to-1 trade. If I extend my risk, my cushion is more, so my risk, although in absolute value is more, but I have more cushion now, so the probability is more that the trade will work out, but my reward to risk is reduced. So this scenario has more reward to risk than this scenario. So as an aggressive trader, I would keep my stop loss under this low. As a conservative trader, I would accept a low reward to risk, but I will keep my stop loss down. Okay? Now in this case, the trade worked out fine. In this area, there was a lot of consolidation. You have the price in a box range here. But once it broke out of that, it easily went and achieved this target. It took too many days because it's a daily chart, but if you count from this candle till up to this candle, it's been a long time. This was February first week, and here we are talking about March last week. So almost 1.5 months you would have had to wait for that target to be achieved. Okay? Alright, let's have a look at setting profit targets with the morning star pattern. Which trades would I take and which trades would I not take? So let's analyze this situation. So you have a morning star here, and it is not a perfect morning star because the real bodies are touching each other. However, there is a second signal here. So first signal is the morning star, second signal is the hammer. The lower shadow is twice the height of the real body. Nice hammer. Then third signal is the bullish engulfing pattern. This is the third signal. So these two candles, the white real body is completely engulfing the prior black real body, which completes a bullish engulfing pattern. So 3 signals in one. Moreover, signal number 4 is, you see this hammer. The lower shadow is more than twice the height of the real body, coming after a downtrend. So that's signal number 4. So you have the hammer, the bullish engulfing pattern, and the morning star confirming prior support areas. So, which is a very, very positive sign. So these are 4 signals coming together. So if I take an entry here, I can either choose to keep my stop loss under this low or under this low, because this is now become our support zone, right? You have one low here and you have one low here. So as a conservative trader, I would keep my stop loss under this. So that would become my risk. Now, this is a 10-minute intraday chart, okay? So if I want a quick momentum trade, I see the psychology shifting in 10 minutes here. It's just a 10-minute candle. I can quickly aim for a target here, first target, because I'm going with the momentum. I am not waiting for a daily time frame. It's not a daily candle. So I can go for a quick momentum trade because the reward to risk ratio on this is very low, even less than 1. So even though I would be uncomfortable, as an aggressive trader, I can quickly go for this kind of profit in the next 10-15 minutes, keeping my stop loss here. However, the actual trade would be this, where I keep my stop loss under this, and that would be my second target, this one. It is still not 2:1, but it is very close to 2:1. So I would have to measure it. I would take it only if it is 2:1 trade, okay? So in this case, the trade has worked out fine. It has achieved this target without anywhere near going near the stop loss. And as soon as I would see this doji, I would get a confirmation that there is something wrong at that 1270 price. So that would be my exit point, because a doji or a candle without any real body points to confusion in the market or equilibrium in the market. So when you see this kind of a small real body candle at a very important resistance area, then it's better to scale back on long positions. So we have taken a long position here. It's better to take this much profit and get out of the market. Okay? Alright, let's now bring our attention to the reward to risk. That's our focus here. So you have a downtrend. It's a 10-minute chart, intraday chart of Gale. So you have a Morning Star pattern here. If you look at that's not a downtrend, it's a small box range. But if you look at this chart from this candle, that's a clear downtrend. So you have a Morning Star here. It's not a perfect Morning Star because the first and the second real bodies are touching. Now, is this a hammer? Although the lower shadow is more than twice the height of the real body, I wouldn't call it a hammer because of the trading range itself, because the trading range itself is very small. The trading range is the difference between the high and the low. It's a small spinning top, I would say. I wouldn't call it a hammer. For a hammer, I would want something like this, where, the lower shadow is decisively long. In this case, it's very small, so it indicates confusion in the market or a stalling of the prior trend. But the actual confirmation came after a tall white candle. So it is a risky trade, so I have drawn the purple dotted lines here, so that's our risk. That's our reward. It's far bigger than 2:1. Now, the question is, should we take this as our resistance 1? I wouldn't bother too much because it looks like a box range here. The price is stuck here. Maybe the market is taking a breather here after a nice downtrend. The market wants to wait and then go back again down. It's not a big deal, this resistance point. The main is this one, because this is where two opposite looking candles, tall candles, appeared and the market went down from there. Probably the market was ascending from here. So that's the reward to risk ratio. In this case, it's a risky and aggressive trade because it is not confirming any prior support area. So in this case, it was not this candle that helped us achieve our target. It was this candle. Because it during the session, it hit our target and then came back to close under our target, but our target was achieved. And look at the power of the Morning Star pattern. 3 straight consecutive white candles, higher highs, okay? So that is how I keep the reward to risk in check if the trade offers a good reward to risk on an intraday chart. So I would take that trade, okay? Right, we have already looked at this. So let's have a quick example of a standalone Morning Star pattern. We have looked at standalone hammer, standalone bullish engulfing pattern, standalone piercing pattern. The idea is the same. If a pattern is not confirming prior support, it is a low probability, risky trade. That is how you trade a Morning Star pattern aggressively. So let's quickly have a look at an example. Now there are a lot of problems with this Morning Star. First of all, I would think twice before calling this as a Morning Star. There are reasons for this. First, ideally in a Morning Star, I would like to see a tall black candle. So we want to see the bears completely in action. So if this would have opened here, then it would have been a nice Morning Star. Okay? That is one problem with this, with calling this pattern a Morning Star. Second is the spinning top is touching both the first and the third candle. Okay? Those are the problems that I see with this Morning Star. So this is a daily time frame of Grasim. So if we call this as a Morning Star, it becomes a standalone Morning Star. It is a risky trade. If we look at these 2 candles, they are completing a bullish engulfing pattern. The long white real body completely engulfing the prior black real body. Ideally, it should have opened here. That would be a perfect bullish engulfing pattern. But since it has opened itself higher, so there is invisible white candle here. So I call it as a bullish engulfing pattern because it's even more bullish at the opening itself. So that gives us some relief, although it's not a perfect Morning Star. But there is a bullish engulfing pattern. Now, if we wait for a price confirmation, because we have some doubts here, the next candle has closed above the Morning Star. So that gives us the confirmation to go long on this trade. However, we are buying at a higher price. So if we take a trade here, that would be a low probability, risky, aggressive trade. With that as our risk, as we've discussed many times before. And then aiming for these highs. Okay? Because the Morning Star itself is a very powerful pattern. In this case, I would be nervous taking the trade. Here, as you can see, the reason why I was nervous is because although the low has held as support, that low was not because of the Morning Star. It was because of the bullish engulfing pattern. If I draw a purple dotted line, these 3 candles tried to break that support, but were not successful in doing so. However, intraday they have broken and hit our stop loss. So that was a risky trade. We should have probably looked at this cautiously as a Morning Star. We should have looked at this candle confidently as a bullish engulfing pattern. We should have waited until you see what happens at that price. And if you carefully observe, this is a variation of a bullish engulfing pattern. If this would have opened here, it would have been a perfect bullish engulfing pattern. But it is still a variation of a bullish engulfing pattern. So And I cannot call it a perfect bullish engulfing pattern because it is coming after a box range. Remember, if the bullish engulfing pattern comes after a flat price action like this, it is not a bullish engulfing pattern. It has to come after a downtrend. So I would have my doubts calling this a perfect bullish engulfing pattern. However, it is appearing near the support area. So there is a lot of confirmation happening here 3 days in a row with a daily chart. And that is why the price has gone up. So if I were trading this, I wouldn't take this trade. But I wanted to show you the standalone morning star pattern, how we should look at this price action to decide what to do next. Sometimes it is always better. Just wait and watch what is happening at a particular price level. And if you notice, it was all happening near the 700 level. Okay, so probably 700 was an important round number or a critical price point for Grasim during those days. Okay. Alright, so in the previous video, we looked at a morning star which was standalone. Now we look at a morning star which confirms prior support. We have looked at multiple examples, even for a hammer, a bullish engulfing pattern, and a piercing pattern. If these patterns are all confirming prior support, that gives us the additional confirmation that we can go long, because the support confirmation actually means that at that particular price point, there were bulls who came into the market. So chances are this time also they may come back into the market. So any support confirmation gives more weight to the trade. So a morning star pattern confirming prior support is a very strong bullish sign, especially for something like a morning star, which is a 3-candle pattern. So it represents bullishness, then some indecision, and then final victory taken by the bulls in the form of a tall white candle closing above the midpoint of the first long black real body. Okay. So let's have a look at a quick example. So this is a classic hammer. Now I would not be too comfortable calling this a hammer, because a hammer should come after a downtrend, even if it is a short-term downtrend. Now this is of course a short-term downtrend, but look at how many. It's just 3 candles. I would prefer at least 4 to 5 candles of nice downward movement. Then I would be more comfortable calling this a hammer. But nevertheless, it looks like a classic hammer, and the bulls have aggressively pushed the price from the low of that candle. Okay, so I wouldn't be comfortable calling this as a hammer, but the lower shadow indicates bullishness, and indeed it proved bullish, because if you look at the price action which happened after that candle, that it proved to be a hammer. Okay, although the trend was very small. Okay, then the market went into consolidation here, then it went down. So you have a morning star here. Is this a hammer? No, because the lower shadow is not equal to or greater than twice the height of the real body. Another thing is the trading range itself is very small. You have 2 signals here. One is the morning star, although not a perfect one because the second and third bodies are touching. You have the morning star, you have the bullish engulfing pattern between these 2 candles. There is no hammer, so that's the second signal. Third, of course, is our prior support confirmation. So this candle created support, so we have to respect that, and the morning star has respected that. This is a chart, it is a commodity chart, metals, aluminium, it's a 1 hour intraday chart. So during that 1 hour, this candle tried to break that support but was not successful. So whenever the bears try to break a support and are not successful, it's a very bullish sign. Okay, so you have three signals here: the morning star, the bullish engulfing pattern, and the prior support confirmation. So that gives us the confidence to put the trade. So I would keep my entry here. My stop loss would be under the low of the pattern. And I would probably aim at these highs. Okay? So in this case, you see 4 white candles in a row. Now, after 3 good white candles, you suddenly have a small white real body, which is a cautionary sign that maybe the bears are coming back into the market. It doesn't make sense to wait till the price reaches here. So we have to adapt to the market situations. The moral of the story is any morning star confirming prior support gives us that extra confirmation to take a long position. Okay? But we have looked at the morning star which was standalone, and we have also looked at the morning star which has confirmed prior support area. So now we look at price confirmation as we have seen with the hammer, the bullish engulfing pattern and the piercing pattern. A morning star pattern with price confirmation is an even more bullish sign. Now here I would mention that if there is a morning star which confirms prior support, that is enough of a confirmation for us to take a long position. However, if the morning star is not confirming prior support, it makes sense to wait for one extra candle. If that extra candle closes above the morning star close, then we have that what is called as price confirmation. So let's take an example. This morning star is not confirming any prior support, but I like this morning star because you have a tall bearish candle, then suddenly an indecision candle. The market has closed near where it's open. This can be called as a hammer because the lower shadow is more than twice the height of the real body. The real body is near the upper end of the trading range, and the trading range is also large. It is as good as this tall black candle. So a bearish candle, then an indecision candle which can be called as a hammer, and then you have this tall white real body. I wouldn't call it a long white real body. I would have wanted it to be more bigger than this. However, if I look at purely on a closing basis, it has closed above the midpoint of the black real body. So I would say this is a morning star. Now, since it is not confirming any prior support, so we wait for this extra candle. Okay, we wait for one more day. This is a daily chart of Britannia. So we wait for one more day. So that candle has closed above the close of the morning star, which confirms our bullish view. So instead of buying here, I buy here. So my reward to risk ratio decreases because my stop loss is here, and if this was my risk, now my risk has increased because I am buying at a higher price. But the reward remains the same, which is this resistance or this resistance. So that's a resistance zone. So the reward remains the same. Reward in fact decreases for this because I am increasing my risk. But in either of the two cases, the reward levels were very high. So it makes sense to wait for that, to give up that extra gain, to have additional confirmation that the price is likely to go up. So if we wait for a price confirmation, that increases the probability that the trade will work out in our favor. However, it comes at a cost, which is the reduced reward to risk. This concept we have already discussed in the hammer, the bullish engulfing pattern and the piercing pattern. Now, if this were confirming a prior support area, so let's say there is a price action here and you have a support area, and that is gets confirmed by this, then you have 3 signals. One is the morning star, second is the support confirmation, and third is the price confirmation itself. So that you are significantly increasing the probability of the trade working out in your favor, although at a cost, which is the lower reward to risk. Okay. So in this case, the market went up and you have this candle which indicated that there was no need to wait for the price to go up to this point Because here itself the bears have given us an indication that probably this trend is likely to end. So we would have been in this trade for only 3 candles, but that was a nice profit, especially on a daily chart. Okay. Alright, let's apply the same concept which we did for the hammer, the bullish engulfing pattern and the piercing pattern. So you start with a morning star pattern which is standalone, which is a low probability, risky and aggressive trade. You go for the next level which is support confirmation. A morning star pattern confirming prior support increases the probability that the trade will work out in our favor. So this is aggressive trading. This is conservative trading, and this is ultra-conservative trading. As you go down, the probability increases because you are waiting for extra confirmations. Of course, you can combine the morning star as discussed with other indicators like Bollinger Bands, stochastics, RSI, moving averages, support and resistance levels, and multiple other Western indicators. But this is the most basic way of trading the morning star pattern. The more confirmations you have, the more you are increasing the probability that the trade will work out in your favor. However, in these 2 cases, if we wait for a price confirmation, we are buying at a higher price, remember. So we are increasing our probability of the trade working out. However, it is coming at a cost which is the reduced reward to risk. So let's quickly have a look at an example. So this is a weekly time frame. Again, I reiterate, the bigger the time frame, the more is the probability that the trade will work out in our favor. The bigger the time frame, the lesser the confirmations we need. So this is Apollo Hospital, a nice downtrend, that too on a weekly chart, which is very important. So you have a morning star, bearish candle, indecision candle, bullish candle. Okay, cruising above the midpoint of the first black real body. So a morning star is confirming prior support created by these 2 candles. This is a variation of a bullish engulfing pattern. A variation because the price has opened within the prior black real body. If this would have been like this much white candle, so it is completely engulfing the prior black real body. That is when I would call it a perfect bullish engulfing pattern, but nonetheless it has proved to be support. That support area is confirmed by the morning star. This candle I would have liked to be bigger because the black candle is bigger, but given the fact that it is a weekly chart, so during the entire week, the bulls were more powerful than the bears. You look at the long lower shadow relative to the small upper shadow. This indicates bear bullishness. Also, the white real body shows the bullishness in the market. And these 2 candles have been around 15 days because it's a weekly chart. So around 14 days, you see some indecision and then the bulls coming back into the market. It speaks a lot about what is happening in the market. So in this case, we don't need to wait for a price confirmation. We can directly go ahead and take the trade. Although we have to look at the reward to risk. So that's the entry. The risk would be this low, or the low of this. So that would be our risk. And if we try to aim at this, it's a nice 2:1 minimum reward to risk ratios. That's R1, that's R2, this is R2, and that's R3. So we have to watch the price as it comes near these levels. If there is a strong close above R1, then we can wait till the price reaches R2. If there is a strong close above R2, we can wait till the price reaches R3. Or if you're happy with the profit that you get at R1, you can simply get out of the trade. In this case, R1 was hit with a very strong close. That same candle was responsible for breaking R2 itself. So it made sense to wait So if one candle is breaking R1 and R2, that's a very strong bullish candle, that too on a weekly chart. That's a powerful signal that the bulls are in charge of the market. So if 1 week closes above R1 and R2, it makes sense to wait till R3. However, you see next week what happens. The shape of these two candles itself tells you that there is something wrong on this week, because this candle is more than 10-12 times bigger than this candle real body. So that was an indication that this prior trend might be ending, which is exactly what happened for the next entire month or so, because these are 4 candles equals to 1 month. The next entire month, there was bearishness in the market. So this candle gave us an early sign that the prior trend was not sustainable by the bulls, probably because of this resistance. So I would have exited at this candle itself. So it took 1, 2, and 3 weeks for me to book my profits, and that too large profits. Okay? Because it's the weekly chart. Alright, now it is quiz time. Would you take this trade? Why? If yes, why? Then if no, why? So this is Hindustan Zinc daily chart. Have a look at this chart. Think about it, and would you take this trade based on what you see here? This is a Morning Star pattern. I wouldn't give you many hints here. Just pause the video, come back to it. Alright, let's see what is happening here. Let's analyze this chart. Let us read this chart based on what we have learned. So there is some price consolidation here. First, it's a daily chart, so it's significantly higher time frame. It's not an intraday chart. You see some price consolidation here. The price is stuck in a box range. However, the downtrend starts here. Nice downtrend, because you see how many black candles in a row? 1, 2, 3, 4, 5, 6, 7, 8 black candles in a row. And then you have a hammer here. The lower shadow is more than twice the height of the real body. It's a white candle hammer. The real body is coming near the upper end of the trading range. So definitely that's a bullish sign. And it is not a perfect morning star if we look at these 3 candles, because the real bodies, the first and the second real bodies are touching. The long white real body has easily closed above the midway point of the first black real body. In fact, it has closed above the opening of the black real body, which is even more powerful. So it's a very powerful sign. You have a morning star, that is our first signal. Then you have the hammer, that is the second signal. The only problem with this trade is that first, it is not confirming any prior support. So that's one negative factor. So -1 I would say. -2 is, if I were to take an entry here, and then I'll have to keep the stop loss below the lowest low of the morning star pattern, which is this. So I'll have to keep my stop loss here. So that's a huge risk. Even if I consider this as my first resistance, R1. Actually, I wouldn't give much weightage to this because the price is in a box range. So let us ignore R1. Let us go for this, because that's a decisive. So let's call this as R1, okay? If we measure this, it's not 2:1. It is slightly less than 2:1. So I would not be comfortable taking the trade. It's a daily chart, and if I take a trade here, probably it might take a few days to reach here, maybe 2 weeks or so. And we see that at this range, at this price range, the price gets stuck. So this is -2. One negative factor here, and one positive and another positive factor here. So if there were support confirmation, I would be comfortable taking the trade. But this is how I would analyze the trade without looking at any other indicators, Western indicators, purely on the basis of reward to risk. I would not be comfortable taking this trade. So I would not take this trade. I would have liked the reward to risk ratio to be better. I would have wanted more support confirmation. If I wait for a price confirmation here, let's say there is another candle which opens and closes above the morning star close, then you see I am buying at an even higher price than what I would do here. So that would further reduce my reward to risk. So no, I would not be comfortable taking this trade because the risk is too high. So if we really look at the price here, so that's, let's say, 215 or something. And wait, what is this price? 260. So we are talking about 45 points on the stock, and which is priced at 260. So that's quite a large percentage, maybe 2% or so. We are looking at a risk of 2% on the stock, which is very high, 2% relative to the price. So 45 units on a stock which is priced at 260, that's a very high risk. So I would not take this trade. And rightly so. See, the stop loss has been broken twice. Even if I keep the stop loss just under the low of the morning star pattern, still it has been hit twice, here and here. So ideally I would have waited for the price to come back. So the price came back here and bounced back, but this is no candlestick pattern. Here you have a candlestick pattern. What is this? This is a piercing pattern. I would consider this also as a candlestick pattern. That's a hammer. Okay? If I would have taken the trade at the hammer, my stop loss would have hit again. So this piercing pattern was the right trade. Although it's not a perfect piercing pattern because the opening has not been below the low of the prior. Opening has not been below the low of the prior black candle. So if the opening is within the lower shadow of the prior black candle, then we would call it as a variation of a piercing pattern. Let me repeat that. If the opening is below the low of the prior black candle, then it's a perfect piercing pattern. If the opening is within the black candle, then it is imperfect piercing pattern. However, the closing has been good. That gives me the comfort level. So I would not take this trade. Okay? All right. Another quiz question. So this time we have a weekly chart of Nestle. Would you take this trade? If yes, why would you take this trade? If no, why would you take this trade? So that's a little hint for you. I'm drawing a circle here. Pause the video, come back to it. Alright, let's analyze this. So it's a weekly time frame. 1, 2, 3, 4, 5 black candles in a row. That tells you that it's a strong downtrend. So it's weekly, so 5 weeks in a row. Now you have a morning star pattern here. Very nice morning star. Long black real body followed by an indecision candle, followed by a tall white candle. I call it tall because it's a weekly candle. Quite a lot of price movement here, and the closing has been near the open, which is well above the midpoint of the first black real body. So it's a nice morning star pattern. So if I were to take this trade, the entry would be here, the stop loss would be here, and the reward to risk would be somewhere here. That's R1. Let's call this R2. I would be comfortable with R2, not R1 here, because R1 doesn't give me quite that 2:1 reward to risk. That is what we want. That's the risk. So it's 1.5 reward to risk. That is one negative for the trade. This is 2:1. So even if I take this trade, I would see what happens here. If I am a conservative trader, I would wait I would not take this trade because there is some stalling of the price here. Plus, I would see whether this morning star is actually confirming. I would have to go back and see if this is a downtrend. And if this is a bullish engulfing pattern which is creating a support, then that adds extra confirmation to the trade because the morning star pattern is confirming the prior support created by the bullish engulfing pattern. So, all in all, I would not be comfortable taking this trade because first, I don't know based on the chart I have here, I don't know whether it is confirming the prior support because we don't know, this might be a box range. So this is not a bullish engulfing pattern. So first, I don't know whether it's confirming prior support. Second, the reward to risk on this is poor because it's coming off because there is quite a lot of resistance here. So because of those two reasons, I would not take this trade. In this case, although the trade has broken R1 and R2, although in hindsight it has worked out, but if I were given that situation, I wouldn't take this trade because I need more confirmation and I need more reward to risk on this trade. Okay?